that's where people get stuck, is they are not patient enough to have kind of this pictograph in their head of looking at something and saying, where's all the big money going to enter? Where is this move going to stabilize? Where are people taking all the risk in this trade? They're taking the risk right here. They are taking the risk down here in these lower hold levels or against the global trend, probably even a little under that. They're probably allowing something to fail. If the risk down here becomes even lower, they are probably willing to let it bleed out as much as it can to take risk on a trade somewhere down here, right? So this becomes exactly how you need to look at every single move and starting to categorize leverage and what you're willing to do on a trade. And there it is. Those people were rewarded. Not yet have I seen one spot that looks good to buy. This is the first spot that looks good to buy, where this is going to be a very safe move, at least to see if it can break trend and have a swing up. This looks like a very safe move. It's the hold level inside the leg. And you could even get really extreme with this thing and really greedy and even adjust this down to here and say, how greedy am I willing to be? G or R, greed or risk, right? The same thing. This could, I think we called this G in the last lesson, but G or R, greed or risk, right? So now you have to look at this move and we're going to see how it reacts here. I'm assuming this will have a positive reaction now. So now it's trying to stabilize against the move. It's trying to hold the larger trend. It's trying to stabilize against the move. And this would have a reaction just like this, where we have identified the best spot to get in. We've taken the least amount of risk, and we are trying to see if this move can stabilize now against this trend, right? Against this downtrend that started and got it here. So we're just going to make this really thick like this. So now we're seeing if we can actually even close a valley. And if we can't, if we do just hit an inverse level in here somewhere, if that's the level we hit and the move is done, we can just expect further distribution. But at least at that point, we got out profits, right? At least at that point, if we entered here and we saw this move hit the inverse level, well, we've made our 16%. Yeah, I'll reduce it down a few percent, 3%, because we didn't get time to leave right on the nose. We still made 13% with relatively low risk, even during a failing move. So this becomes a point where your risk factor is extremely low. You were very greedy on the move by waiting for it to get to the highest point where it has the most chance to succeed. And you let it mature, right? And then you can see there, it did fail down and you were able to get out in 13% profits. And this looks like it could quite possibly be failing down again. And now we are trying to break that distribution cycle. So the same thing that we would have just done on a micro time frame. Let's step that back one. I think I went one too far here. So the same thing as to where you could have entered that trade. And let's start to zoom into this region here. You could have entered that trade for the first time on the first touch, took that exit on the inverse level, re-entered based on trend, right? You have trend is now, let's delete this green one. It's no longer, delete the green one. It's no longer relevant. Take this trend out here. And you could have now been entering on this risk factor of the trend hold. And really, there's no harm in entering here. Because you can just exit where you're seeing the breakdown of the move happen. But the key factor is you identified the best points to buy, which is reducing all risk, which is giving you the most profits, and you're taking profits in a trade that has a high success rate to give you profits. So this becomes a high success rate trade that is very safe and isn't fragile at all, because it takes a lot to break this move. It takes breaking a local trend and a pretty important hold level to break this move. And then even going further down, now if this move fails, where do we rebuy, right? And a rebuy spot, a really good one, looks like right here. So this is a potential rebuy spot as well. Or on the backside of this trend right here, right? On the backside of this trend becomes 2. So we're going to make this one a little thicker right there. And then we'll make this one, how do we do this one? Let's just turn this white. We'll use white for the backside of trends. So now we've kind of identified where next possible failure points could be, right? Like this. So we're going to just let this mature. And this would have been probably a pretty good spot to enter, as you would have already taken entry on this hold. You could just see what it's doing here. And it does take a move up. And now it still has to kind of back close this valley, and you're still in profit. So, whether this move is about to succeed or fail, this isn't all of a sudden going to rip up. It's coming off too much distribution. So as we identify in this lesson where to enter a trade based on fragile factors, the next lesson we're going to do the same calculation breakdown, but on the side of going up, and how we calculate this going up and how we make these decisions on the way up, right? We're going to walk through this a few more steps and see what happens here and talk about that. I'm assuming here that we are going to back test this level again, but I guess we'll see. We could have the option to leave in failure right now, which is failure is not failure because we're still in profits, right? And now we're looking to break this kind of local trend that we have and move up against this blue line here, which I'm going to change to an inverse level because that's what it is. It's an inverse level, and see if we can hold through this, which is exactly what we'd be doing right now. And we don't. So at this point, the trade is done, and we can just successfully exit the trade, and we have lost nothing to exit this trade. And now we're just going into distribution against the larger piece here, right? Now we are just going into this sharp edged distribution, like so. Right now we have this next hold level being hit that we talked about. This being the next hold level where we can basically have the same setup of a fragile, and let's change this color here, of the same thing, of this, what is the risk associated with buying here? The risk is still a 1. You are back testing very extremely low hold levels to see if this can ladder up, right? So this is gone and broken. We no longer have that, so we no longer have that. We can move this off screen somewhere until we need it in the future. We have the backside of trend. Backside of trend here, we're going to turn this to a new factor here as a 0.5 risk, right? Anytime it touches trend here, you could set a buy on this trend every single day, and every time it touches trend, you have almost no risk buying into the backside of trend. So that could be another area where you're identifying. But the common thing you guys are noticing is the correct levels being identified in failure will give you high reward trades, as they are extremely likely to, at a minimum, touch and see if they can break. So you're trying to buy the bottom right now. By doing this, you are trying to buy the bottom. And you notice how everything on this side of the chart down here has a fragile factor of 1 or less. But everything up here, starting with this, is increased by at least 100%, right? This is 2, this is 3, this is 4.5, this is 6, 7, 8, right? You're creating a catalog in your mind of what is low risk. By identifying what is low risk, you will be able to enter these trades. And just like this, you put a buy here, and you could even just sell now for a few percent, even 2% if it looks like it's failing, or you can simply get out of the trade, because all you're looking to do here is break trend and stabilize the move. You could simply just get out of this trade. You don't have to take a loss on this trade. You could just set your stop back at 1 or 2 sats under 613 here. And if you did, you would have been rewarded with the next one, right? You are identifying spots where there is no risk, because you're not buying this to try to long the move. You are buying this to see if it can stabilize against trend. And that also becomes where you have to, like I said up here, you have to wait for the move to kind of test out of this trend, right? Well, and there it is right there, right? The lower the risk you're taking on this move, the more you're able to take this swing trade and get out with a 10 or 15% profit. Even if you sold right where it closed and took a 6% profit, it's still a 6% profit on a move that was free, right? So you still have great profits on a move that was completely free. Step through, it's trying to stabilize through trend, which is going to have a swing up here. So now is looking like a spot where, again, you can identify something that has a very low risk to fail down and will at least try to take a move up, which it does right there. And it hits the inverse level. So this was a great spot to enter. The inverse level would be, it's kind of hard to tell because we're on the daily, but it could be any one of these candles on the weekly. But anyways, for now, we're going to say it's this just because that's when it hit. I'm sure this is possibly a weekly, backside of a weekly candle maybe. And this is a hold level that it hits. And you have a great trade here. You have a highly successful trade here that just allowed you to take another 25% move. There's relatively low risk on this. Now we have this adapts out to here. And now the cycle starts over again, right? Now the cycle starts over again. Now you have the same level here. You have this right here, which is a strong buy zone. So you have those two. This is relatively low risk. All of these hold levels in here are going to be relatively low risk. If we could break this down and find the lowest holds in here, there could possibly be another hold level here, and there could be one right here. So in this case, this one would be maybe a 2, we're going to call it, and we'll make this one orange, and that would be this trend line right here, would be a 2. It's still relatively low risk. However, the better hold here is this right here. Holds trying to break trend, and this is a 1. So you have kind of these two low risk scenarios because you're at the bottom of the larger part of this move, identifying what looks like could possibly be a good spot to buy, right? So then really, what are you buying here? I would be first, I would just be buying this 589 level and seeing if it holds, even if that even is a level, which it ends up being. So you identified your buy right there. And what happens? You have a relatively low risk trade and you got the opportunity to get out in profits. And if the move is failing by not back attacking whatever little value is in here, then you can just still get out in profits. So it becomes relatively straightforward that this is a very easy move to take, and it's 3 or 4%. But the point is you can even sell for 2% profit when it fails. When it back attacks this inverse inside of this candle, there's going to be an inverse inside of this candle that it. Oh, magnetol's on. I can't do it. There's going to be an inverse inside of this candle, right? So there's two options. It either back attacks the level, which is protected by trend, or it's going to hit this inverse level and fail down. And in the case where it fails down, you can just get out of the trade, and there's no harm, no foul. And then where do you identify your next spot to get in? Well, you can have something like this backside of this trend right here. This is, again, going to be that 0.5 risk. There's almost no risk trading into that. So these are where you should be taking your trades, right? And you're trying to still break through trend, which is fine. It might happen. You might break through trend, but you did fail your hold level. We can't see what other hold levels are possibly down here that are being held. There could be another hold level in here. And this becomes a spot where if you were to take this trade right now, even right now, it's a good trade to take because you're breaking trend. You're most likely going to go up and attack this level again. And it doesn't. It fails down, but let's see. Backside of trend there. So this is where you'd have to analyze this move down further. It's getting a bit hard to do because we're kind of just guessing where levels are. We can get rid of this guy right here. We have this guy right here we can get out of. And then you would have some hold somewhere inside of here, right? So again, hold being the lowest risk right here. And then you just fail down. So that becomes how you have to start to catalog these types of moves. When you are looking at something like this, you have to see where the move started, where the move ended, and if you're buying in distribution or if you're buying on this side, this is how you have to start assessing these moves, right? You have to start looking at them as to cataloging inside of your head. Does the highest amount of risk in this trade lie? And where does the lowest amount of risk in this trade lie to take trades that will give you a high success rate? Trades that will give you not a lot of risk and can give you a lot of rewards for the little bit of risk you're taking, and understanding the difference, right? Up here, like we talked about, this becomes a very fragile move. And the more fragile it is, the faster it's going to move up or down, right? The faster this thing is going to try to break up and break down, right? It's a completely different trade than something that is down here. So this will create a leverage catalog in your mind about what becomes the least amount of risk versus what becomes the best types of holds to buy, what becomes the lowest risk, highest success rate to purchase into. So let's go to the current landscape of, turn this off. Let's look at this side of the chart now. Okay, let's break this down to a smaller time frame this time. Let's do this on a smaller time frame. Assessing the risk and kind of building this catalog on the top side. Also, first off, becomes a test of where do you identify a proper buy. Right now, we're at an all-time low on a lot of these coins. So there is no hold level in the past to identify a buy zone. Rather, what we have is trends, right? We have backside of trend to trend right here. This would have then moved from here to here, right? This, oh, magnetill's not on. This would have been from, come on, from here to there, right? So the first thing we can identify about trend touch doesn't happen often. This becomes a mastery of finding the right point to buy. But trend touch on the backsides of these trends basically becomes zero risk unless it's broke. It is the most minimal amount of risk that is available on trade when you identify trend to trend, and every day you're setting a buy on that trend. This becomes almost impossible because during distribution like this, you don't know when that's going to happen, and it could be 5 sats higher here, it could be 10 sats higher here. For this reason, it is good to do trend touch on a daily sense, right? Every day you can adjust your buy zone. So if you were right here, for example, what you would do if you are patient enough. So let's identify the least amount of risk in a trade where the most amount of money can be made. On April 21st here, 586 would have been the place you put your buy, or you could have put it at 590 just in case sometime through the day it happens. And then the next day comes and you would be doing the same thing. So you're here now on this day, on the 22nd, and now you're at 575 by the looks of it. So you would have put it at 580 or 582. And then this day comes and you would have adjusted your buy order to 566. You put it at 570 or 571 to accommodate for the variance. On this day, it would have been at 557. You would have put it a little higher. Due to the factor of this being such a safe place to enter the backside of this trend, wherever it is, we actually didn't have it defined yet. So we actually have to step forward in this move. So right there, it's hit. So actually, we need to start this over again. So we've identified the backside of trend. So we would have gone through this every single day and done that same thing. The amount of greed associated with this is extremely high. You very rarely will get filled on the backside of trend. However, that becomes a great gauge to where you can buy. If you are willing to be patient enough, right, and greedy enough, this will complete one day until this decides to uptrend, and then that will never complete again. So you have completely missed out the bottom forever. So you could go and adjust your buy zone for an infinity until it gets hit, and it might not get hit. But then on this one day, on May 13th, it got hit, and you got basically a free trade. So let's identify that first. You got a free trade. You have a zero risk factor on this trade. You can just go forward one day and you'll see it, right? Like this is the bounce that's going to happen off every time the backside of this trend is touched. So you can identify the backside of trend is touched, and you can take the trade in the next day or in the next hour, or in the next 4 hours or cycle, or wherever it's you expect to move up, which is very likely to happen, right? So that's the first thing you can identify. This has almost no risk associated with it, but the amount of greed and the amount of patience that you have is probably at the max. It's at about 10. So on a scale of patience and greed, where P is patience and G is greed on one side versus profits on the other side, it is extremely high, right? If you can have a lot of patience and greed, then your profits will be through the roof. However, this may never get hit. So this may be a high chance of that WTL, which is waited too long to get into the trade. This is a very likely scenario because you're not guaranteed to hit backside of trend. Backside of trend hits, and typically we see a bounce reaction in any stock. If you were to identify this, however, backside of trend just got hit and this coin hasn't moved up, you definitely could say, okay, this has a high chance of moving up in the next day or two. This might be a good trade to take. So if you are looking to buy the backside of trend, no matter whether you did it here or here, no matter where you did it, you're likely to have a pretty good reaction. So if you can catch it, great, you have a pretty good move. What becomes the next best place to enter? Again, we have to start building a catalog. We have no information to go on back here. So we can't say there's a hold level maybe back here that we can identify this as a very safe place to enter. That doesn't exist in this moment. The only thing we have supporting this up right now is our backside trend. And we are trying to break a topside trend as well. So we have something like this right now. We had this topside, right? We're just going to make this red as it's our normal daily trend. We have this topside going to this swing right here, which failed on that, which is going to this swing right here, which ended up breaking above. So we basically have two things we are looking for here. Trend, right? We have the backside of trend, which we can identify as extremely safe. We have the front side of trend, which will now give us what we are looking to enter on these positions. And we can't break this down, so we're just going to use two kind of arbitrary spots as hold levels. This could be one hold level possibility. The next hold level possibility could be right here. And again, these fall subject to the same thing, where you have a relatively low risk factor, especially when you're breaking trend like this. right here. So this one on the bottom side is going to be this trend right here, the lower trend. This one on the top side is going to be the higher trend here. So you basically are looking for the same thing that you were trying to dissect back here, the same information where you're coming down. You're still coming down on this move. You're just not doing it on this larger scale right here. You're just not doing it over the course of 2 months. You had a big move up in one day. You have to identify the micro holds, which we will probably go back and do. Actually, let's go and do that right now. Let's just break this down and do that right now with the replay tool. So we're going to put the replay tool right here when it broke, and we're going to look at these hold levels, and we're going to start doing the same thing, cataloging exactly what this trade looks like in a hold scenario. We can actually make some proper holds here. So you have one right there, and we have one right here. We'll start there and see how this move unfolds. So it's fine. It breaks over the valley, and you can see why it has the reaction it does. Right, it hit the back of the hold level, it broke over this valley, and then it just kind of was gone. Right. So now you're looking to where is your next point of entry going to be? Obviously, the same thing we have up here. These become riskier zones to buy when you are creating kind of this catalog in your head of risky trades, right? This becomes the same thing. Your risk factor, even on a local time sense, even though we did it daily, now we're doing it on the hourly, even on a local time sense becomes this cataloging of how risky a move becomes to take, right? And then even back down here, you would have the side of this trend here would start to become that safest place to enter. That doesn't mean this is going to get hit. This has a very unlikely chance to get hit at this point because you did break a larger trend. So, you have all the way from a 0 risk factor down here to a 1 risk factor to a 2 risk factor to a potential micro risk factor in here, which would be something like a 3 or a 4. Let's just try to do that again. Something like this would be a 3 or a 4. Right. And now you are trying to identify where this swing is going to happen. We haven't seen that swing yet. This here we can turn orange because it's going to be color coordinated to that line. And this would be a 7. And something like this would be a right here, that valley right here would be like an 8 or a 9. It's just very high in the move. It's very high in the move to hold. Now, I want to stop there for a second and talk about something. So we have this bottom side here would be a 7. Okay, we'll put that there and we'll put it on this side. That's fine. You guys ever notice something that does come up like this and has this crazy swing move, comes down and holds a super high level, right? Like that, holds a super high level before it makes a big move. Well, now maybe you understand why the bigger move will happen, because the higher the fragility factor, or the higher the fragileness of this move, the more it can gain when it breaks whatever it needs to break to have that move. So if something is holding this fragile factor of 8 and it's kind of already pushed up and it had never come back down. So in this case, if we have, let's just exit that. Let's go here. In this case here, if we have this candle here and we can identify this high fragile factor, and all of a sudden we come down and hold this level like this and create a trend like this, and then all of a sudden break trend, that's where you see things go up like 40, 50, 60%. They have broken over some high fragile level, and they have held something that has a high fragile factor to it, something that is extremely thin on both sides. I guess that's one way you would put it, very thin on both sides, a very fragile of a move. They have held that level. That is going to be a knee-jerk reaction in either direction. You are either going to have extreme failure or quick succession off of that level due to why, right? Due to how fragile the move is. Something like down here, this is going to come and hold the level. You might have, mediocre swings in here, and then something like this will have smaller swings, and something like this will have the in-between, and even down here would have like a little, smaller one until it can kind of break this level, right? The size of the swings is always correlated with how fragile the move is, right? The lower, the safer it is, the less people that are willing to sell, and the more people that are waiting to get to this moment. And then it starts to get squirrely as it comes to these trends, right? Like it starts to get squirrely when it gets over here. It starts to do this and this and this and then this, right? As to right here, where it's just kind of meandering to get to this moment right here, where it can start to swing up and it starts getting that bit of a more rapid reaction. It's the same thing that happens here, right? Basically, as the more fragile the level gets, the quicker it starts to move. And that's the same with trend. Trend has a fragileness associated with it too. So as you get closer to trend, you are increasing this number. If fragile here is 1, right? It goes higher the closer you get to this trend. So maybe at this point it's 2, maybe at this point it's 3. Oops, that's a bad 3. Maybe at this point it's 3. Closer to trend, it's a 4, but it's getting to a 4 and it's having these swing reactions, right? Because the move is getting more fragile. So it's having these loopier reactions, right? So that's another way to scale how fragile a move is how closer it is getting to trend, right? And then when you have something like this, where you have the fragileness of the move is already high, right? And you've come here and it's already 8 and you are approaching this trend. This is pushing this thing to like boiling point. This is like an 11 or a 12 where you have complete blast off 80% of the move because you're already starting with an extremely fragile move and you are closing the gap between trend. Wherever this trend is, I'm not sure where this trend is, but I've just drawn it there as an illustration, right? Wherever this trend is right here, the closer you are getting to it, the more this number is being increased, or this number, or this number, or this number, or this number, right? The closer you get to that trend, the more that number is increasing. So as we go through the move, right, it becomes a testament of greed versus what you are willing to do in the move, right? And so that whole level is broken, right? And we have trend. So that's what you'd be looking for in this move, right? Trend was created. And this move will get more fragile as this goes. So what do you do now? You start drawing your trend here. So you would have had your first trend here, and you would have seen, okay, let's step that back a bit actually. You would have had your first trend here, right? We can get rid of this one. This one was broken. That's fine. Like this to something like this guy right here, the bottom. And you can see where it tries to fight trend and it finally breaks down, creates a new local trend like so, and is fighting to break up against this trend as well. So this is fighting to have a move up, but it still needs to break this trend, regardless if it's fighting to have a move up, right? The reward here, we looked on the daily before, this is the hourly hold level, as fragile as it is. That's the level you're identifying to buy, whether you're identifying this one or this one or this one, right? And they're all going to have their own reaction points. And the safer the move, the less of a reaction it's going to have. So you would have entered this as a first touch, right? And you would have been rewarded with 18%. Relatively the same thing we looked at with that other trade. Now we're just breaking it down. When we looked at this trade back before, over there earlier in this move on the downside, back on the daily, we identified the same exact move where we found the hold level, right? And we said it was 23%, I believe it was. We're seeing the same thing here now. This is the same move broken down on a local time frame. The higher the fragile move, the swingier it becomes. So you buy this and you have a 19 or 18 or 17 or whatever you end up getting on this trade, 20% move. We'll just round up and call it 20% from this point to this point here. 16%. There you go. So you have a 16% trade, but it's a very quick move, right? Like you can see this happen in less than half a day, and then it probably just has a pullback against trend, which it does. It just breaks down trend, and it will now look to go target one of these lower levels to try to hold the move up. I guess we should adjust trend here as well. So trend is like this right now, and it'll very much do the same thing and have that reaction against trend here and break down and lose its move there, right? So breaks down, loses its move there, and so the cycle continues, and it just goes and constantly attacks trend and constantly loses trend. Right there, it looks like it's trying to break above trend, right? And so it continues, breaks above trend and moves up. Just let this play out for a second here. Okay, pause it there, identify this swing here. And our distribution cycle has now continued, right? We broke the first part of it right here. So when you see this uptrend holding, breaking through this right here, it's going to have a swing up against the valley, which is fine. This then adapts out to here, trying to break this trend now. Right here, I guess it would be. You're going to have very much the same thing, loses trend there. Moves this out to here, right? It breaks there and has its move, right? Has its larger piece of its move. So we're going to let this play out and take a look back on this. Okay, that's good. So then buying on this side becomes a test of how much risk versus waiting too long. So this was a good example of this level down here was waited too long, right? This here was too greedy. These were both, or sorry, you didn't wait too long. These were both. Well, actually, you did. You waited too long because you tried to get into the move, and you were too greedy on the move, and you weren't willing to take enough risk. If you took this risk here, the trade completes. If you tried to take this risk here, your trade did not complete, right? So you actually waited too long if you identified this and this. But again, so is factored in with the fragility factor of this move. Take into account that you just hit backside of a trend here, you're going to have a lot more in this move. And you did break a longer trend here. So let's just identify this long-term trend again that you broke, right? So you're going to come here. You are going to say, okay, well, we actually did just break this super long-term trend right here. We're going to go zoom into this moment right here and take a look and see how this reaction happened. And you hit backside a trend, you break over this long term, and you hold above it. So you actually closed above this trend. So when you take everything else away, when you take this away, when you take this away, when you take this, and you look at what the TA was telling you on a larger time frame, you had a daily trend that broke, right? So you broke this this large term trend. You held this level back here, and you started to trend up off of it. So had you continuously waited, I think this would have been the last point of entry, would have been on this trend right here. This could have been recognized as a move up at this point right here. And you have relatively low risk because the hold level's held. You have now closed over top of this daily that you have from back here, this daily that's slicing down. You have hit the backside of trend, which was identified back here from the swing previous. You closed over that long-term trend, and you developed your uptrend even in this moment. And let's move this out of the way. You developed your uptrend in this moment right here, where you had identified this swing to this swing right here, or I guess it would be this one. Well, whatever it is, fractally fine. We'll just leave it here for this demonstration. That's fine. You identified this, and you had your trend hold through the close and the break of this off of a hold level. So this kind of told the story of why this thing was going to move up, which gave you a good indication of how much risk you are willing to take. And the first step of getting into this trade would have been here, right, as a scalp trade to exit the push of whatever value it had here. And then even furthering your technicals, what level did you hit on this side right here, right? Did you hit an inverse right here, or did you close the valley? Well, you hit an inverse, so you're going to try to hold this inverse as well, right? Pandora's box. You're going to try to hold this inverse and push up. And then you end up closing the daily off of it, which then you back attack to the actual valley here. And closed above it and had your move up, right?